Hey, what's going on, everybody? I am here with my good friend Josh from Migma. Josh, give everyone a little bit of an intro in your world and what you do, please.
Sure. Yeah. I help business owners and executives really, from a consulting standpoint, help them learn about financial literacy and additionally learn how to use their numbers to make better decisions inside their business that ultimately increase profitability, um, decrease expenses, increase operational efficiencies, but get over that scarcity mindset really when it comes to reading financial statements and trying to put them all together, right? Because you got all these numbers like moving around and you're like, what does this mean? Okay, cool, I've heard about a P&L. I heard I'm supposed to do this. Well, there's a lot more that it comes to business when you're running your company. And I want to help impact the entrepreneurs around the country and the world, really, with Mingma specifically, which is a business tool focused on financial planning and analysis. So, I mean, if you guys don't know what that means, that's okay, right? But ultimately, what we do is we take key financial statements and we break them down into key financial ratios that give you a better understanding of how you make money, and then ultimately where your strengths and your weaknesses are against your industry average. And those are all really important things because we're all competitive. I mean, if you're watching this, you're probably competitive. If you're a business owner, you're competitive, right? You want to win or you want to succeed. And I realized at one point that you have to be data-driven inside of your business, and your financials showcase the behavior of not only you or me as a business owner, but your entire organization.
I love it. And the reason, guys, we started late is because we were talking about this for a while.
Yeah.
And I think what Josh does plays into what I do, and then vice versa, because most people, most entrepreneurs have no idea about any of this stuff. And the ones that do still don't have it down to a science.
Mm-hmm.
All right. And it's the best equivalent I can give you is whether you look at the data or not, whether you understand the reports or not. It's similar to, and I hate saying this and using this example, you're sick, okay? And either you know it or you don't. If you don't know that you're sick, you're going to ignore it and it's going to get worse.
Yeah.
And whatever that problem is going to grow, and it's going to be harder to fix later. Or if you do know it and you're just willfully ignorant, or you feel something's off and you're willfully ignorant, the shit's still going to continue and you're still going to have a problem later that you have to fix. So unless you address these things head on, okay, life isn't going to get better. Your business isn't going to get better. Okay. Yeah, you might get some decisions right by feel, and most entrepreneurs, I will tell you, will. Okay, because of their experience. However, the real analysis, the real things that are happening in your business, the things that you have to capture, the things that you have to know in and out, are exactly what we're talking about now. And most people don't want to do it. Most people want to avoid it because they think if they don't acknowledge it, it doesn't exist. That shit don't work, guys.
That is definitely not how it works. Yeah. Problems show their head about 4 months after to 6 months after they start. At least in my experience, I don't know about yours, but when I was running my first company, I'll never forget waking up with $58 in my bank account and knowing that we had made a ton of sales.
Yep.
And realizing that we actually were collecting cash, but our payment processor was holding those payments simply for a return policy that we had to list on the bottom of our website.
Yeah.
It was like 35 grand, dude. And I was like freaking out. Right. And I'm like, I've got construction going on. I've got service trucks out there. We're sacrificing profit to grow. And meanwhile, I'm going, awesome. I'm out there selling, trying to outsell problems. And in reality, if you don't collect your cash, you're in a big, big trouble.
Yeah.
So,
it's a big part of it.
Big wake up.
Also, like, people don't understand too. Here's where I see it a lot. And this is why I think everything that we do goes hand in hand before we get into the business questions.
Sure.
I see a lot of people that come to me with a problem asking for the wrong solution.
They don't even
You know what I mean? Give you an example. Someone B2B. Hey, I need a line of credit. I agree, you do. But that's not what's going to solve you waiting 30 days or 45 days to get paid.
Mm-hmm.
You know what I mean? That's only going to actually make the problem worse down the line. There's a different solution that you need to set up before you get the line of credit.
Yep.
So it's kind of like being a doctor, a financial doctor.
Yeah.
That's really what it is.
Yeah. Yeah.
Which is cool. I mean, I love it. I love what I do. I'm sure you love what you do. How did you get into that?
Honestly, I got really upset about getting my financials 2 to 3 months later and not being able to make decisions accurately. And that comes with the amount of new entrepreneurs that have come into the space.
Mm-hmm.
Right? And on top of that, there's a huge demand for bookkeeping and accounting services, but there's such little supply that no matter what expectations you can set with whatever bookkeeping service that you're with, the likelihood of you getting your financials on time and making accurate decisions before those problems start or before you get into cash flow issues, is really freaking high.
Yeah.
Right. And the risk is, 8 out of 10 businesses fail because of improper cash flow management, right? 9 out of 10 of them, and this plays right where you are, right, is they're undercapitalized.
Yeah. Well, so also, like, I tell everyone, in at least from a personal level, when I do Financial Fitness Friday, think of like your income divided into like a pie chart, right? So we want to fix costs at 25%, ideally, right? I understand today these ratios may be off, but for me, I like fixed costs 25% or less, variable costs with my life 25% or less, 25% savings, 25% investing. And me, because I rather do a little bit more, like 15% savings and 35% investing.
Right.
Personally. But your business kind of works the same way, and people don't realize that.
Mm-hmm.
And most people manage to their bank statement instead of actually their financials.
Mm-hmm.
So I tell people, actually, I'm not going to tell you what I tell people. How regularly do you think people should do their financials?
If I could look at them daily, I would look at them daily.
Next.
Yeah.
We're going for optimum, right? So what do you think the bare minimum is? Because we know entrepreneurs. What?
Weekly. Absolutely weekly. Okay. You should be in your QuickBooks, looking at your financials weekly, right? And we know this, right? But a lot of people don't realize it is, there's what's called GAAP and non-GAAP financials for you, right? And your non-GAAP financials actually sometimes and oftentimes can be more accurate than what you're getting from those reports from your accounting team. And that's not to say that they're doing a poor job. That just means that you're ahead of them in the time frame. So you have more transactions, you have more costs, you're likely growing, there's more complexity to your business. So looking at what's inside of your financial statements, and I consider the 3 most important, and I'm sure you do, or you have an opinion on this, is, number 1 is your balance sheet. And most people have a hard time either reading that or understanding it. The second is your statement of cash flows. I think 99% of business owners don't get a statement of cash flow. And they don't understand how to read it either, right? And like you were mentioning, measuring your self-worth off of what's in your bank account or what's on your P&L is tough.
Yeah.
But your third most important is your P&L.
Yep.
And you still need it.
Yeah.
But I tell people this all the time. What's on the bottom of your statement of your P&L is an estimate. that then gets reconciled from your statement of cash flow, from your operating activities, financing activities, investing activities. And that's what ends up in your bank account.
Absolutely.
So if you learn that, you're going to be in a much better space.
Yeah. And also, financials have been manipulated since the beginning of time.
Sure.
Right? At least P&L.
Sure.
Okay. Especially end of the year.
Yep.
Good, bad, and different, just the way it works. But cash flow, I don't care what business you have. Cash flow is everything. And if you don't have the right cash flow, you're not going to have a business.
Everything.
That's just bottom line.
Yep.
Okay. So what are some of the ratios that you look at?
Sure. I look at profitability a lot, mostly because the vanity metric of revenue versus profitability, right? And I'll give you an example of one. Is I was having a conversation with a guy who had started a roofing company, and he was really proud about the fact that in his first year he grossed 1.8 million. And I remember talking with him about, okay, cool, that's awesome, man. Like, how much profit did you make? And he's like, well, actually, I lost money last year. And I'm like, and we got into this hour-long conversation about how you can measure your profitability from, gross profit margins to operating profit margins, net profit margins. And ultimately there's you have more equations in there too, right? So return on assets, which is another way that you actually generate money and cash inside of your organization. And then your return on equity.
Mm-hmm.
And then how much profit are you making per employee? You may be a solo entrepreneur, but how much profit are you actually making across your entire organization? Because every employee, no matter where they sit inside of your organization, is responsible for a portion of the profit. Same thing with revenue.
Yeah.
So those and that's like profitability, and it's like most mundane fashion that I can say.
Yeah.
Right.
Some employees are going to drive more profit and revenue than others by far.
Oh, absolutely.
80-20 rule. And some employees, their job isn't to generate revenue. Their job is to help the people that do generate the revenue.
Yep.
And there's nothing wrong with that. You need both.
Mm-hmm. I agree. Yeah. So I look at the full spectrum. Okay. When I think about ratios and what ratios are key, what would be like the basics of things that you would want to look at as an entrepreneur. And where I actually started, was looking at those profitability ratios, looking at my debt and how leveraged my business is, then looking at my cash position through liquidity, right? So what's our cash position? Right. And how quickly can we turn cash or any type of assets into cash? Right. And then finally, like operational efficiency. And there's probably a bunch of different business owners that are watching this that are in a bunch of different industries, meaning you still have inventory management in there. You had mentioned earlier, and we had talked about this, right? Like cash collection, how many days does it take you to actually collect your cash once you sell that product? How long does it take you to pay out your vendors, and what type of relationship and terms do you have with them?
Yeah.
Right. That's huge. That's huge for your cash flow. Right. And then we look at like total asset turnover and fixed asset turnover to actually see, how well we're utilizing those assets to generate sales.
Yeah. Well, just to touch on your point, right? Let's say you're in the trade services and you have 60-day terms from your vendors. Okay. You start a job, it takes you 30 days to complete the job. And then then you're net 30. So you have to invoice, and then you're waiting 30 days. So realistically, everything should line up where you get paid on day 60 and then you pay on day 60 to your vendor. In reality, that never happens, ever. Not once. Someone's late.
Yep.
Okay. And then these gaps get exaggerated. So if you're not aware of them or you don't have the terms set up, it makes it even more challenging.
Yep.
So then you got to come to someone like me to get the right programs that fix all this stuff before you can truly move forward, expand, or not worry about cash flow.
Right.
Okay. Because you could be profitable, but your cash flow could be very, very challenged. I'll give you an example. Manufacturing, logistics, or basically anything that's net 15, net 30, net 45, if you're growing very quickly, it's going to be a challenge. And there's certain programs that you need to plug in, like invoice factoring, if you can qualify for it, that will help that. And then on top of the invoice factoring, you want to get a line of credit for short-term needs. And beyond just having these things, you need to know actually how to use them to maintain cash flow and to have that profitability and not eat in further to your profitability.
Yep.
And so this is our world, right? So let's talk a little bit about you as an operator.
Sure.
Right. And what we can come back to this because I love this conversation, but you as an operator,
sure.
What are some of the mistakes that you have made as an operator and how do you fix them?
Can you give me a little context behind that?
Yeah. Operating, running your own business.
Yep. Leadership first and foremost, and how you lead yourself is really important. I remember starting my first company and realizing probably 2 years in that I had to be the example of the organization. And that came with leading myself first and putting high expectations on myself, because people won't follow you if they don't see that you're willing to do the same thing. And then you stay ahead, right? And, I think I made a lot of mistakes in leadership up front, which helped me learn hard lessons. It's like the school of hard knocks, right? Yeah. Where, if you don't focus on developing your leadership skills, you're always going to be in that fire sale role where you're going to have to continue to outsell your problems. And the highest cost for any organization is their employee turnover.
Yep.
So I would say, if you're struggling in your business, look internally and look at what's going on with yourself. Are you preaching things that you're not practicing? And if you are, then you've got to figure out, slowly but surely, whether you can find a mentor, you can find somebody within the organization that you trust that will give you a feedback loop to help you grow what we call emotional intelligence. Yeah. And if you've never come across emotional intelligence, you're like, I hate talking about my emotions. I get it, right? I don't like talking about my emotions either. But we have two sides to us, right? We have our logical side and we have our emotional side. Yeah. And if you can find a healthy balance between those two, you're going to become a great leader.
100%. There's actually a book, Emotional Intelligence 2.0. It was very good. Yep. The other book I would recommend is The Little Book of Stoicism.
Haven't read that one.
You know what? I don't know if you know Mike Burns or not. Great friend, great person. Okay, cool. Just amazing human being. And he posted, I'm like, did you really like this thing? He goes, yeah. He goes, get it. You'll love it. And I do. I'm probably halfway through, and it's a great book.
Okay.
Great book. It actually mirrors almost everything with Arete, and it goes into the beginnings of, some of those Greek words that we believe in and the core values of Arete.
Yep, 100%.
It's probably why we all like it so much. But
yeah. Yeah, they pretty much set out the 10 commandments, and you just look at them and you're like, yeah, that makes sense. Absolutely.
Makes sense. Yeah. Yep. Mm-hmm. So what do you see, some of the biggest, and there's a lot of them, what do you think some of the biggest mistakes operators make today that you're seeing?
They don't transition to a business owner mindset. They stay in an operator mindset. or what the
Can you
differentiator
go?
that
Can you
I
go?
that I use is like, you have your technician mindset, which
Mhm.
most operators, when they start a business, they've likely worked in that industry prior, right? In my world, like I worked for Oracle and EMC. That's why I've developed a SaaS product, right? I never worked in pools before I started a pool company.
Yeah.
Don't recommend that you start a company if you never have, okay, had experience in that industry. But I had a co-founder with me who had an uncle and had worked for his uncle that had built a very large pool construction and maintenance company.
There you
And
go.
and it was like, okay, well, we moved to Texas to start a gym, like most people's dreams. And we had to pivot and shift when things went sideways on the negotiation, and they pulled a bait and switch on us, and we had to move. And we were already in Texas. We were like,
Yeah.
okay, we moved from San Diego to here to start a gym. Great, cool. We're about to open 5 gyms. Deal evaporates. Now what? And boom. But that comes into, I think, a lot of like 3 main elements, right? But your adaptability as an entrepreneur, because if you do have that business mindset, you can move from industry to industry, and a lot of the principles are the same.
Yeah. Well, business is business, right? We always hear that. Very cliche, but it's very true. Also, I forgot to ask this question when you mentioned this earlier. You said that you like to compare your clients against the industry average.
Mhm.
Where do you get that information, the industry average information? Like, how do you know where the average is? Because I don't. So educate me.
Yeah, sure. There's tons of research out there that can give you uh, a breakdown of a lot of the different equations. For my industry averages, we use our clients, and we actually have, I have mutual data NDA sharing agreements with companies. So with like 8-figure companies that give me data, we actually formulate that. And we already have algorithms that are pulling from different industries and putting those key ratios together so you can measure it against your industry. And it's really important when you're doing that, when you're looking at financial ratios, that you're looking at it against your industry, not against some like overarching industry average of total of like 10,000 companies. That's not going to give you an accurate estimate of where you are.
Mhm.
Or additionally, what are the proper like business management styles that need to be incorporated into your company that are standard for your industry? I'll give you an example. If you look at days payable outstanding, or how long it takes you to pay your vendors, right? Some people that I've talked to and coached in the past or consulted with or done fractional work with,
Mhm.
they're like their days payable outstanding is like 3 days, and their industry average is like 50. You're like, hey, like you're spending money way too quickly,
Yep.
and you're also collecting cash way too slowly.
Yep.
Based on your own industry, you can now go out and have conversations with your supply chain and your vendors, right? Like distributors, whatever, to increase your terms so you can better manage your cash flow.
I love that. That's brilliant. A lot of people do that. A lot. I see that. What are describe like your ideal clients for Mingwa?
For Mingma?
I know I'm jumping around, but I want to get all this out.
Yeah, sure. We work a lot with accounting firms,
Okay.
which is cool. We work with wealth managers. We work with bookkeeping firms as well, and we'll work directly with clients. If like they're a business, they're on top of their books,
Yeah.
right? And the nice thing is is if they want a business management tool, which most people do, they just don't know it exists, right?
Yeah.
And ultimately, but when you can provide that type of data and you're working with experts that can also give you a better understanding of how to improve your scores on those ratios, it's really important that you have a team around you, right, that can help you understand what strategy you should take in order to improve those scores. Because if you're looking at data and you're looking at numbers and it confuses you, that's natural when you first start. We all suck at stuff when we start, right? I sucked at financials when I started, but I have a degree in marketing and new venture management. And it's like, but I had little exposure in finance. I literally I've been studying finance now for like 10 years. Yeah. And I don't pretend that it's easy for people to understand, right? They go cross-eyed when they're like, what, financials? Somebody else handles that for me, right?
Yeah. It's one of those things a lot of people don't know, so they don't have anything to compare it to, which is ultimately the worst thing you can do if you're hiring out a service, right? Because if you don't know, you don't have a baseline level, you don't know what to expect, you don't know how to manage it, you don't even know if they're doing a good job or not.
I agree.
So you're paying for a question mark.
Yep.
So I do think everyone should educate themselves. And going back to, something that you said about common mistakes and everyone not having this data readily available. Without the proper data, it's guesswork. And what's going to happen is you're not going to be able to grow it effectively or efficiently. Okay. You can't pick up on little problems that are in your business or things before they start. Right. Which is why I think having a consultant, having a coach, having the right metrics is everything. You mentioned QuickBooks earlier. Mm-hmm. What platforms do you like best as a consultant? Is it QuickBooks? Because QuickBooks is a little wonky.
Yeah, it is. It is. I find it pretty easy to use, but I've been using it for a decade. Yeah. So, the more I learn about it and the more I know about it, you kind of get ingrained in like whatever software that you normally use, because the major overhaul of switching to another software is such a pain in the ass that it's so sticky. Yeah. Right. There's plenty of ERP systems out there, right? And that's what QuickBooks is an enterprise resource planning system. Yep. So people are just like, oh, that's like my accounting software, right? Which is cool, right? But you've got NetSuite, you've got SAP, you've got Sage now, you've got Xero. There's a bunch of them, right? But ultimately, I'm not obsessed with QuickBooks. Don't get me wrong, because it will give me the data that I need to give me the data that I need, right? And that's what that ERP software is really why I like using it, is because it's like, okay, cool. I can get my non-GAAP. I can look at all my transactions. I can figure out, am I spending too high in these areas? In my, operating costs, like you were talking about, my fixed costs, my variable, what's happening in my COGS, whatever, but ultimately all of those systems are going to spit out the same financial statements, just they may look different based on your business and your industry. So there's some keys in there that I pay attention to, more so than just trying to dig into like the data and every single transaction itself. It's like, okay, well, where are we strong? Where are we weak? Where are we losing traction? Where are we gaining traction? What's the story behind those numbers? Yeah. And like we talked about earlier, showcasing that behavior inside of your organization from the executive level all the way down to the person who is your janitor. Okay. Like, you just need to know how to manage your business more effectively through financials. And I see this as like a baseline. You're never gonna get to an 8-figure mark if you don't start learning financials as quickly as possible. And we know 90% of businesses never even make it to 7 figures. So talk about trying to get to 8.
Yeah.
You can't do it without systems, processes. And how does that happen? Look at your financials and look at your key equations and how efficient your company is.
100%. I want to well, it's not really a challenge, but you're probably going to agree with me. Something I've been doing recently, at least for me personally, I don't like looking at other people in my industry because I think I do something different and similar at the same time. I do like looking at people that are in similar industries that are at the top, that maybe I can pick up a couple key processes that no one in my industry is thinking about.
Mm-hmm.
Give you an example. So I do all things business financing and business growth related.
Yeah.
Well, what's similar to me? Insurance and mortgages.
Okay. Yeah.
Those are the same guys. The guys that are doing that have no problem at the top sharing with me some of their practices, and I can in turn I don't have any challenges sharing some of the things that I'm doing that could be different.
Yep.
There's a lot of cross-pollination there. Yep. And you never know where you're going to get your next great idea from, and there's a lot less friction in a like or similar industry to draw from. And you could also, I'm sure you could look at their stats too. I haven't looked at the statistics part. I've just looked at some of their processes and procedures, because you never know what you can, I hate saying steal, but adapt.
Yeah. Well, adapting new revenue streams, right, is really important for any business. Mm-hmm. And it seems like you probably have a competitive advantage with the services that you offer that are different than what you have in terms of your competition. And I also agree with you that looking at similar industries can give you better ideas, and you can measure your financial ratios against similar industries. But if you're a construction industry and you're looking at, and you're trying to compare against a software company, like, no, that's a no. Okay. But if you're looking like with you, right, when you're talking about doing business financing and all of that, and now, okay, mortgages have a lot of similarities, insurance have a lot of similarities. Yeah. Okay, cool. Well, where can you look at those industries and try and kind of just cherry pick what you could be able to do from a competitive advantage standpoint that just brings more to your value stack?
100%. The best way to think about that is you can compare two birds, right? They're similar family, right? Even though they're two different species, but you're not comparing a bird to a dog. You know what I mean? You could be in a similar industry or related services like financial services. Mm-hmm. But yeah, I love that example. SaaS and construction ain't going to fly.
No way. No way.
No shot.
You look at gross profit. Like if you look at gross profit averages in software industry, it's
90%.
Dude, it's 80%. Yeah. If you're operationally efficient, once you get up to that point, you're generally running at about an 80% GP. Yep. Right. But versus construction companies that most of the time, and this blows my mind when I even say it, because I've explained this a couple of times, but construction guys love to just look at gross profit. That's it. They're like, okay, especially if you're using subcontractors, right? They heavily weight their GP, and then they try and minimize whatever their back office expenses are, which is fine, right? But the majority of construction people that I see too, and I'm not saying everybody, but I am saying some people don't understand the difference between markup and margin. Yeah. And that's a big thing, right? I remember talking to actually a guy who builds, I used to design some pretty large commercial projects for outdoor living spaces. Yep. And I was talking to him, and he's been in the industry 45 years now. I was doing his cost analysis, and he's like, yeah, cool. 30% markup. I was like, all right, cool. All right. So that's you're comfortable with 23% margin. And he's like, what? I'm like, yeah, that's 23% margin, right? Because you got to divide your gross profit from your revenue or by your revenue in order to get your margin. And he was like, oh shit. Okay. I'm like, you know how to build. It goes back to that, technician mindset versus business owner mindset. And how do you manage your business?
Yeah. I agree. You see that a lot too with people that are specialists. If you go to school like doctors, lawyers, they're not taught how to run a business. They're taught how to be a doctor or be a lawyer. So when they have to operate a business, they need to hire. Their first key hire better be a great office manager.
Yep.
Or operator.
Yep.
So,
I agree. I totally agree.
How much when
I like it when we get along.
Yeah, me too, Siri. I don't know what that was about.
What was that? That was on your end? Oh, that's funny. I have a question for you. How many, with the people that you consult for, how much of what you're consulting or coaching has to do with what's going on a macro level?
You mean within the economy?
Yeah.
Not a ton. I try because that's mostly political, and at least in my opinion, people can argue that or debate that all you want. But when you look at like the macro level, that if I look at how that would affect the business, I look at it from a supply chain standpoint and a tax standpoint.
Mm-hmm.
So but everybody talks about COVID, and I hate approaching this subject, but
Me too.
Okay, it's true that everybody now understands that supply chain is really, really freaking important because of logistics and why inflation went through the roof, because boats were sitting outside of LA or whatever port that they were at for 10 extra days because they didn't have enough labor, which when you equate it, every day that boat sits out there is another $100,000 in cost. So if during COVID they went from the average being under a day to being like 9 or 10 days, I can't remember exactly specifically what it is, but that's $1 million in extra cost just to get it in there. And then you've got a shortage on drivers, so things aren't moving as fast, which just significantly increases our inflation. So when I look at it from that level and I talk with my clients about that, it's all about, hey, how are you protecting your gross profit and ensuring that you're working with your supply chain and raising your prices above what inflation is.
Yeah.
Because if inflation is 8 to 10% and you're only raising your prices 8 to 10%, well, guess what? You haven't made any extra money. You're doing the same amount of work for the same amount of money. Or what a lot of businesses did is they never raised their prices. Their costs went up. And if that hits you, right, that change, a small change in like a drop in revenue or an increase in gross profit has a dramatic effect.
Be a nail in a coffin.
On your net and on your operating profit, right? And what your cash flow looks like. And you don't think about, like, if I had like a 10% hit up top, like it could be a 40% hit on my net margin.
Mm-hmm.
That's
absolutely
bad. That's bad, right?
Very bad. Very bad.
Exactly. So you got, there are outliers, right? And when you look at like statistical analysis and you look at, what falls within certain ranges, and then COVID being an outlier, right? Or some sort of weather catastrophe or act of God being an outlier that you can't prepare for. Okay, well, now what I hope business owners understand and what I work with my clients about is, how are we protecting you for the future? Because it's all about creating a sustainable business that is generating an asset that creates the life of freedom that you want. It's the reason why you started a business in the first place. Yep. Well, at least 9 out of 10 business owners I talk to say freedom. I wanted freedom. Okay. Did you get more freedom when you started your business? No, I worked way more. Of course you did. Okay. Because you have to earn that freedom. But unfortunately, you're going to have to learn a ton of skills that you never even knew you needed to have in order to run that business and get that to that sustainable place. So you can start hiring and you can start like you replacing yourself and really focusing on your operational efficiency. And that's what I use key financial equations for, is measuring all that and saying, hey, you're strong here, you're weak here. There's some, and we measure it all the time. So it's so important. It doesn't matter what size business you are either. Okay.
No.
It does not. If you're under 7 figures, if you're doing 100 grand, okay, cool. If you're doing 10 grand and you just started, cool.
Yeah.
How are you looking at your expenses? How are you looking at your revenue? Making sure that you're actually keeping that on track. The sooner you can learn how to manage your business through your financials and through data-driven decision-making, you're going to crush it. You're going to scale a lot faster, but you're also going to do it in a manageable way where your costs don't outpace your revenue. And I see that a lot with business owners, and it's tough because it's like, oh my gosh, I woke up and I don't have any money. And what am I going to do? Right?
Yeah.
That's scary.
Yep. It's very scary. I've seen that happen a lot.
Right.
Dude, you absolutely crushed it. Is there anything you want to leave the audience with? Because that was the mic drop. If I had one clip of this entire thing, that would be it.
Awesome. Well, I appreciate that. I think if I had anything to leave everybody with, look internally, look at yourself. And I know that that's hard, right? But look at the legacy that you want to leave and look back at why you started your company in the first place. And if you can understand that as you grow as a person, your business is going to grow. You're going to attract more people. And the only way that you can truly do that is by having cash in your bank account and actually looking at your financials. And if you struggle with financial literacy, I'm here to help you. I'm sure you are as well. That's the goal of Mingma, is to help business owners understand where their gaps are, what questions they should be asking to increase their financial literacy. So then they become financially intelligent, start making better decisions, start increasing their profits, and start crushing it by developing that asset of their business.
Dude, I love it. If anyone had questions for you, wants to work with you, just wants to reach out, what's the best way to do that?
Yeah, sure. You can always email me at josh@mingma. It's mingma.io. That's the name of my Sherpa. When I hike to Everest, most people ask me that question. You asked me that question earlier. How did you come up with that name? Right. But you can also visit our website, which is mingma.io. And you can call me or text me, 469-989-8429.
Awesome, man. I appreciate it. You are brave because this is live on every platform.
Well, there we go. Hopefully my phone's probably going to blow up. Or